everyone. Patrick Reid, Adamis Principle. Wow, what a day recently. Risk off, led by EM, dollar EM much higher broadly. US 10-year yields taking a bath, and S&P and Dow Jones going south. Gold a bit higher. The only thing that was interesting for the Adamis Principle, and certainly myself, was Swiss not bothered. Now, I did a bit of digging. Swiss flows is all I'm going to say. Those of you who know how the Swiss franc sometimes moves, then I'm going to leave that up to your interpretation. I can't say any more than that. Nonetheless, it was risk off. Some of the reasons are US macro creaking. You know, we had a smelly ISM print. That was on trend, year on year on trend. Really, really bad. But Thursday's ISMs will be key, because that was actually split from the other ISM. Thursday ISMs, including the services element, is key. If that takes a nosedive, then the US hard data could follow the soft data, and along with PMIs going south as well. So just one to watch. Trump blames the impeachment on stocks lower, so that's probably another potential reason. I'm not so sure myself. You could have also positioning, you know, a bit of patience running out for risk grinding up prior, you know, for the last sort of month, especially before the Saudi oil hit. But who knows? The fact is, it was risk off. So let's kick into the first chart. Always a good indicator, dollar rand. You know, any dollar that goes up in EM is always on my radar. And this, you know, it's slightly off the highs now, but yeah, it's still not looking, still very firm. So carry getting hit. So let's look at the next slide. This bad boy, S&P, says no more. 29.50 got broken, pretty much smashed the day before, and we're still, you know, at the lows. Look for that to cap for any retracement, any goodwill, which doesn't look likely. You know, there's probably a bit of a pause today and a bit more risk off, but anything below that, look for sellers to be layering in. Not a pretty picture. Looks pretty exhausted. And even if you look at like the sort of 4 or 5 days before, just ranging lower, indecisive, but looking quite tired. There was a report that defensives were being bought and the tech stocks not being bought. So obviously the tech stocks are the accelerating stocks for the S&P, well, more predominantly for the NASI. But anyway, next slide. Great, my favorite dollar to sell, dollar yen. 106.86, not quite made it there, but you know, buyers were in there before, but yeah, it's 109.11 versus 186, 106.86. Still very much in the range. A lot of volume being done there for those volume profile guys. Just have a look, and yeah, it's yours to sell really for anything above that. If 106.86 breaks, then you know. We're looking at 104.65. The final slide, probably a great risk barometer as well. Aussie yen. So the yen crosses followed EM, and Aussie yen very nice indeed. Below 73, anything into that, probably you know, expect sellers to turn up. But that's it really. My name's Patrick Reid, and I hope these charts are helpful. It's probably risk off again today, but all eyes on ISM, non-farm, probably a sideshow actually, because the soft data, we're all looking at soft data, transferring into hard data, and watch that risk. Thanks very much.